So, interesting day. Bit boring if I'm quite frank with you. Of course, this treasury story about Trump media and this $2.5 billion capital raising that it's trying to get from investors. Isn't it mad how they all want to borrow money to buy Bitcoin? No one's pulling it out their pockets and saying, you know what, I'm going to buy it myself. Either way, they're buying the Bitcoin, so that's good news. Now, what are we going to talk about this evening? What if Nvidia flops? But what if they don't? Now, I'm going to break it all down for you, and I'm going to help you understand what to look for when it comes to identifying whether a stock is good in terms of its fundamentals and, of course, its technical aspect in terms of the charts. All right. So that's going to help us understand if this rally to the upside with the markets is going to be sustained yet again by another tech stock. Well, it's the only tech stock, to be honest with you, ladies and gentlemen. Nvidia's nearly $3.5 trillion market cap does really well to hold the marketplace. I mean, today Tesla's made a nice little move to the upside only because Elon's quitting politics and he's going to be going back to focusing on Tesla. He's going to be paying attention to that and hopefully a few meme coins. But anyway, that's another story. Bitcoin today didn't really do too much. All right, I'm going to break it all down for you. And let's just see by the end of this live if you are going to be with me on this story on whether or not Nvidia is going to be doing a market a favor or we're witnessing some manipulation. Let's break it all down, ladies and gentlemen. Here we go. So S&P climbs 2% on economic and trade optimism. Ooh, what does it all mean? All right, look. Today we got this data. What a mix-up, man. Like this is the Federal Reserve's dream, right? Like every time they say that the economy is doing good, and then there's the expectation that investors are believing it's not going to be doing good, and then the results come out and show that it is doing good. I mean, say goodbye to your interest rate cuts because it's just not happening, ladies and gentlemen. Here we are right now with this slow loading madness. Come on, 97.9 is it? What is it? Here we go, 94. It actually has come down a couple of percent or so. But it's still going to be at 4.25, 4.5%. Yep, true rate bound 4.3%. That's what the rate is right now, roughly. But yep, investors are still on the expectation that interest rates are going to stay higher for longer. Now, with the data that's come up right now, you can see that 74% are still favoring the idea of a 4.25, 4.5% gain. Chance that they're going to keep the interest rates at those rates. So it's not really changing the scene, but the market today welcomed it. Okay. Of course, Trump has had the conversation and he's trying to urge the Eurozone to make a deal. Otherwise, it's a nice slap across the face with a 50% tariff. I don't think the Eurozone wants that. But one thing you've got to take into consideration is, as I said earlier on, the euro itself is being used in two ways. There's the reaction from the investors regarding the tariff. Three. The reactions from investors regarding the tariffs. The fact that the ECB today, one of the speakers come out saying that there is a possibility they're going to be hiking the interest rates, cutting the interest rates even more. Okay. Third, the euro is a safe haven right now. And of course, optimism in the dollar and the story behind the US deficit. See, like that's all been forgotten about now. Look, titles like this are saying, look, S&P's climbing up. No one seems to be worried about the deficit. Going over into price action itself, you can see that the 10-year bonds have done relatively well, trading 0.47% for the day. Yields have come down today. So if the yields are trading negative, the stock market tends to perform well in that instance. But now let's just get to the beef of it all and understand exactly what the story is. So it says here that Nvidia is going to be hit by China chip export curbs, or it's going to deliver a surprise in its quarterly earnings. Now, let's just understand something. Trump's been going on about these tariffs with China. He's been stopping Nvidia from trying to do business with certain chips to China. He's already now gunning for Apple with users of iPhones in the Eurozone and what have you. It's this is naturally going to have an impact on investors. Okay. Now, the story here is suggesting that even though the curbs on the actual chips that Nvidia is able to sell to China is effectively costing them roughly around $5.5 billion in revenue. Okay, so that might actually show in the next earnings. However, if you recall, when Trump went to the Middle East to do some business, Nvidia effectively got business over there. So is that going to be factored into the quarterly earnings? We're going to anticipate that that's going to be the case. Okay, so now we're just going to go over to the actual chart of Nvidia, just to put things into perspective for you so you can understand exactly what view you want to be looking at it as when it comes to investing in the stock market. So in front of you is Nvidia's price action, and we've got lots of data in front of us, but I want to draw your attention to the columns down below here. You got quarter ending 2024 April, 455%, 262% on its earnings and sales. Great. Next quarter, July 31st, 152%, 122%. Earnings and sales, really good. Triple digit figures, that's still good. October 31st, 2024, 103% on the earnings, 94% on its sales. Okay, so he's got a little bit of a slowdown. Next, quarterly ending January 31st, 2025. Earnings and sales are down, plus 71%, plus 78%. What you're looking for with a stock is every quarter, you want to see its acceleration in its earnings and sales, right? So if the last 3 quarters of a stock have shown an acceleration in the earnings and the sales, then that is a good stock to take into consideration for your portfolio. Let me dive into it a bit more. As it stands on the right over here, you can see that you're getting a bit of information about Nvidia. So its earnings per share growth rate is around 70%. The higher, the better. Okay. If you look on the left, you can see the estimates for its earnings per share. And going into 2027, you're expected to earn around $5.63 on every share that you hold of Nvidia. That is pretty good. That is stellar in my opinion. Okay. Now, one thing you do need to look out for is the fund ownership, because behind the fund ownership is going to dictate whether or not Nvidia is going to be continuing its narrative, excuse me, to the upside. Okay. Fund ownership has been increasing over the last 4 quarters, to say the least. So June 2024, 8,110. September 24, it's increased to 8,314. Then December 2024, you got 8,599. And in the latest quarter, we've just had an increase up to 8,602. So we know institutional fund managers are getting involved in Nvidia. Nvidia, from a structural perspective, looks like it's getting ready to break out. It's only 11.5% away from its all-time high. And when you get a stock that is showing this sort of structure and it looks like it's getting ready to break out, if you can marry the fundamentals behind it, the chances of the breakout are going to be very, very high, as long as the fundamentals are there to back it. Fundamentally speaking, in my opinion, Nvidia is the market leader. It has a market cap of $3.3 trillion. That's a big market cap, so it's all eyes on Nvidia. Now, this is what I want to draw your attention to. Has today been a false move? Because I'm going to give you the idea of what markets are doing right now, and it's all excitable. And this is all going to be good news for Bitcoin, guys. So just stick with me on this one if you're just new passing through. Okay. So the NASDAQ today has made a nice move to the upside-ish. All right. So let's just go over and have a look at the NASDAQ for a split second. Now, that was a nice little pump up there. Now, just to put it out there, the Platinum members today, we had some wonderful entries on the actual setups from this morning. So this was one of the setups for NASDAQ. So if we just click that right there. So I anticipated 2 entry points. You've got the 21,248 and then you've got the 21,336. Now that's on the premise that the market was going to open because we needed to see a sweep of the Asian session. And we wanted to see him try and come down to create the Brinks low to then effectively make the reversal to the upside. This is something that happens all the time, which is why the hybrid system does give you the edge when you're paying attention to the Brinks box, which is the first hour of the stock market, in principle, from 9 a.m. Eastern Standard to 10 a.m. Eastern Standard, okay? Now, if you go and have a look, you can see what they did. They came down and swept that entry point at 21,248, and then they continued with the breakout on the Brinks box high towards 21,336, and then it's made the rally to the upside. But look, it's just gone straight back into the red vector candle. Now, I took this exact trade, and I've been playing on the NASDAQ all day today. So this is the live account that I've got. Made a withdrawal and came start back again with around $5,000. And today we made $8,278. And we go into it. These are the actual figures. So I traded the micros and the minis, and you can see at the top right. So on the S&P, we made $1,522, and then on the NASDAQ, well, on the mini contracts, we made $4,912, and then on the standard on the minis on the NASDAQ, we made $2,160. Made quite a few trades today, okay? But the idea was I was trading the logic of the NASDAQ making the reversal to the upside. So I took the same trade as what I gave out to all the Platinum members. They should have made money today on this move to the upside. But when you think about it from earlier on, what we were talking about in the live stream, look at the build up, all the good news. The stock market hadn't absorbed the idea of the extension of the European tariff coming into play. They got excited about that. Nvidia was gapping up at the open. I mean, if we go over to Nvidia, you can see that she's done very, very well. It's gapped up and it's managed to hold on to its gains. Tesla, of course, has just smashed it today, and it's made that nice climb, 6.95% nearly. But what was it that we identified earlier on? The good news for the Bank of Japan. Investors like the idea of that. So then what did they do? They converted the yen, and then they went over to the dollar and then put those dollars to work. Let's go and have a look at yen right now. What's happened to yen? Oh, there's your carry trade, ladies and gentlemen. The carry trade unwind, not the unwind, the preparation for it. Why? Because fundamentally, if the Bank of Japan are stopping the issuance of bonds, then it means that there's not that much of a supply, which will then force investors to naturally not think that there's going to be more bonds being issued, which is naturally going to demand them to hold on and wait until the yields of the Japanese yen go up higher. Well, what's happened is they stopped that, which is what we spoke about this morning. And then the yen has taken a nosedive to the downside, obviously in the New York session, but you can see it's gone down. What else has gone down? The euro. The euro made a nice move to the downside today-ish, okay? It's continued its narrative lower. We did have the entry point today for the Platinum members, just to put it there. We took an entry on the euro. This was our entry point, and we were favoring euro to come up first to then make the move to the downside towards the 1.12826 zone. And we haven't gone down towards that point yet, but the entry point was up here at 1.13633, and they would have made themselves, if they're holding on to it still at that entry point, you would have netted yourself around 40 pips on the euro. But you can see that euro is moving. Its range is not so wide because it's all eyes on the euro. But remember what I said about the euro. It's a safe haven. There's the spending on the defense. You've got the tariff story. So it's all going to be based on what happens over the next few days. And of course, 9th of July, when we do actually get the actual deadline, it's going to put things into perspective for the actual for the Eurozone, because I do believe that they are going to start pulling it back, but it all depends on the developments of the tariff story itself. But you can see how the macros are all aligning. Now, when it comes to these setups, ladies and gentlemen, they're all positively correlated, okay? Even with Bitcoin today, I went to see Bitcoin make a nice pump to the upside, and we got that little pump, but Bitcoin pulled back ever so slightly, and it's been a very difficult day to trade Bitcoin. This is why sometimes you've got to trade other assets, because Bitcoin pulls this absolute mad behavior. Absolutely terrible, okay? So if you... okay, so you know BTCC, okay? This is the preferred exchange that we use. But when you want to trade Nvidia, if you want to trade NASDAQ alongside Bitcoin, when you've got this dead price action with Bitcoin and this choppy behavior which shakes traders out, BTCC effectively gives you that benefit. NASDAQ is Tech 100. And then, of course, if you go down, you'll see Nvidia stock is right there. So if you're on the expectation that Nvidia is going to come through with a stellar performance in tomorrow's earnings, you building positions beforehand, before the market closes, because that's when they're going to declare the earnings, then you could be setting yourself up for a nice move to the upside. The logic says, okay, that if they are going to come through and investors do have an expectation of Nvidia hitting well, let's just go and have a look at the price action to justify it, okay? So if I look at Nvidia right now, I then say, looks like it's getting ready to break out. The thing is, right, even if the news announcements doesn't come in favorable, Nvidia could still spike up because remember, they sell as it rises. So the market could actually hit the move to the upside, gap up, but then they can bring it all the way back down again. So that's something you've got to be very careful of. So if you do decide to trade that tomorrow, it's going to be Nvidia and NASDAQ that are going to make the big moves. So if you want to trade that on BTCC where you can trade crypto, go over into the description and you'll get the link for that under the Traders Reality link. Now, with that being said, going back into what I said earlier on, if this is a manipulative move. In front of you, you've got the NASDAQ making a nice clean move to the upside. At the same time, Bitcoin's not really making the move just yet. What happened to all the optimism about Bitcoin? Where is it right now? Why isn't Bitcoin pumping, even though it's so close to its all-time high again? Why the stall? And I've said this before. Bitcoin usually acts as a laggard asset. It's always last to move. But when it comes to a macro event, it's like Bitcoin kind of gives you a clue where investors' heads are at. So we know this week that investors, or should I say big whales with wallet sizes over 10,000 Bitcoin, they've been taking some profits. And given that the market today, in principle, Bitcoin should have moved up. The NASDAQ's traded positive today. It has been good news overall. So why hasn't Bitcoin moved up? Maybe Bitcoin is being primed. In other words, if investors aren't going into Bitcoin, maybe they're waiting to see what the Nvidia result is. So they don't want to be buying Bitcoin now at the prospect that if Nvidia misses tomorrow, then Bitcoin's going to be pulled back down. We'd ideally hope that that's not the case because Bitcoin, principally, Nvidia earnings has got nothing to do with Bitcoin. Tariffs have nothing to do with Bitcoin. Interest rates have nothing to do with Bitcoin to a degree, but fundamentally, Bitcoin should be at 500,000 now if it didn't react to all the BS that happens in the marketplace. But you've got Wall Street in Bitcoin. And if Wall Street ain't buying the Bitcoin when technically they should have been buying it today, in other words, price is marking up, okay? It makes you question, doesn't it? Makes you think, hold on a second, what if this move to the upside on the NASDAQ has been a setup? What if they do actually go into the move tomorrow and shift out and then bring it back down? What if that's going to be the case? What if Nvidia actually comes through and completes the earnings, does a great job, but the market still pulls back? What if Nvidia says, yeah, we have seen a curb on the chips and what have you. It has hurt our revenue a little bit. And the actual deal that we got with the Middle East is going to favor cloud or whatever it is going to do. But our prospects of the future are looking like it all depends on what they reveal in their statement to the investors. So tomorrow is going to be a very, very interesting day. And usually what happens is when there is a big news announcement, the NASDAQ always ends up starting to climb, okay? And already NASDAQ is moving up. And if it can clear this range right here, then it's going to be en route towards its all-time high. It's not too far away from it. However, sometimes what you'll find is if you do go back and study all of the earnings call from Microsoft, from Google, and from Nvidia, go and have a look at what NASDAQ was doing a few hours before that news release. You'll always find that it's either going to be moving up, keeps on moving. The data comes out, it spikes to the downside, then reverses back up. Or it keeps on going down, keeps going down, and then the news comes out, it spikes up and recovers the whole thing. Be very careful with it tomorrow, guys, because it's going to be during the market close. And price action could end up getting a little bit flat. You might get NASDAQ trading around the VWAP and being an absolute pain in the back. So just be careful going into tomorrow, ladies and gentlemen, if you do decide to trade that, okay? Now, going into Bitcoin price action, just to understand where we are. Any questions, ladies and gentlemen? So far, so good. Tino, why does the 50 EMA have clouds but not the 200? It's a moving, well, it's like volatility bands of the 50 EMA, okay? It's exponential as well, so it's the cloud is to represent just the volatility of, you can get rid of those by the hybrid system, but it's good to have it because it just gives you the idea of momentum in the moving averages. Any word on Trump is going to allow US participants to exchange like Mexia? I couldn't tell you, but Trump's too busy warning Putin about sanctions. what happened to the ceasefire? What happened to the talks? It's clearly not happening. So we could effectively be getting ready for another event. And you know what that means, ladies and gentlemen? Gold could be getting primed. It could be getting primed to come up. All depends on how bold Putin's going to be. Long or short. Look, man, listen, if you that question winds me up. Long or short. I don't know your risk. I don't know your leverage. I don't know anything. How can I give you sound advice? But I will give you this. Sell XRP. That's sound advice. All right? That is the best advice that anyone could give you. Sell your XRP so I can buy it. Anyways, got a question here. Tino, I'm new to trading. I've taken the free course PDF and watched 100 plus of your videos, but I'm still confused. Does a platinum group include training to help you navigate the market? When you become a platinum member, you get this breakdown. So what you get every single day is you get a video, and I give you the daily market brief. I break down logistically and fundamentally, technically, everything that can happen, what I think will be happening based off the fundamentals of the marketplace. So I dive into all sorts of stuff in this and explain why my logic is I favor price to go down, I favor it to go up, okay? What you get with this is it's like a working education, all right, about the hybrid system and applying it into the marketplace. You learn everything about the fundamentals. I've got PDFs that break it all down for you. So there's a section on the website where for the members, you get access to the PDFs. The PDFs are based on all the strategies that are included in the hybrid system, okay? So here's the PDF library right here. Each PDF I've created myself is breaking down the whole thing about the hybrid system. There's one on there about breaking down the macros. All of this stuff here is all about the way to trade the hybrid. And each of these checklists effectively gives you a style of trading with the hybrid. So every single day when I do the setups, what I do is I refer to these checklists in principle and say, okay, we're waiting for an Asian session sweep. Why are we waiting for the sweep? And I give the justification. I give guys the logic of how to approach the market from a fundamental perspective. What's important? What do we need to know? What don't we need to know? Why is it important that in today's setup that I provided, my reference to the Bank of Japan was very important because it gave investors the idea that the carry trade would be able to be exercised. So I know they're going to be selling yen. I know when yen is going down, the dollar's going up. That means euro is going down. And that's why we projected euro to come down today. And that's what gave us the setup. That's what you get in the setups. You don't just get buy here, sell here, because the idea is to get you to understand the why. If you understand the why, then you then become proficient in being able to do it for yourself. That's the whole point. All right. Tino, what do you think about SoftBank, Nippon Steel, and US Japan Wealth Fund? Lol. Well, I know that Nippon Steel's been happy days. Okay, so Trump's authorized all of that. So that's great news for steel. But the US Japan Wealth Fund, I haven't actually found out about that, Victoria. My bad. Tino, do you see any similarities in your trading strategy to ICT Concepts? I mean, ICT Concepts, you know, there's the fair value gaps. There's the PD arrays, and what other concepts are there? I mean, look, it's a very, very intricate way of seeing the market, okay? But fundamentally, I need to simplify the unknown. I don't want to complicate the unknown. And those that get the ICT concept, they run with it and they absolutely rip it apart. Okay. When you compare the idea of it to the hybrid system, I mean, you come to the charts right now, you've passed through this live stream and you see that I've got candlesticks that are all different colors. I've got sessions like this. And you're asking yourself, what the hell is that? Well, each candlestick gives me an understanding of how price is going to behave. You see, 90% of all the guys in ICT have very, 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 very clean charts. It's like this, right? So some guys will be like, okay, where's a fair value gap? All right. So here's a fair value gap-ish. You got one right here in principle. Okay. Sort of. Challenge me if it's not. All right. But who cares? The idea is price is going to come back into that fair value gap and make a reversal from it. Well, that's what they did. Okay. But because you've got the candlesticks like this, it's kind of difficult to try and pinpoint what is going to work, what isn't going to work. Okay. Because sometimes it doesn't work. Right. But then when you switch it over and then go over and put down the vector candles, already without even marking off the idea of a fair value gap, right? Look at the green vector candle. I already know that price is going to visit that point at some point. I already think that what I need to look for is price getting ready to break down into that point. So I'm already setting myself up. So where an ICT trader will be waiting for that fair value gap to get hit, I would be running shorts from this range, hypothetically, because I've seen stopping volume candles. And then it comes down. I've made my money here, and then price makes the reversal back up. This was yesterday's setup. If you go and watch last night's live stream, Bitcoin, the setup that I put out for the members was for favoring Bitcoin to come down. Now, it did come down because we caught a wonderful entry on Bitcoin. And then I said to the guys in the evening, it's going to continue to go lower. Why? Because it's going to trade back into the vector candle. Now, ICT traders could have been waiting for the fair value gap to come into play before they took a trade to ride this move to the upside. So who's right? Who's wrong? Who did it first? Who didn't? It's irrelevant. It doesn't matter, because whether it's ICT, whether it's the hybrid system, whether it's market cipher, whether it's MACDs, whatever strategy it is, fundamentally, your experience of using the system is going to help you understand when to use it. Okay? If you think that taking any system and coming to the market and thinking because Tom, Dick, and Harry have been making a ton of cash on it, it means that I'm going to do it. Well, you don't know if Tom, Dick, and Harry have been watching fair value gaps and gone back in the charts and drawn off thousands of fair value gaps. They've developed an intuition to understand how likely one's going to work or one isn't going to work. That's the problem with trading today. You think that a system's going to say buy and sell. Hybrid system gives you the representation of where people psychologically react. That's why we have a strategy called the block trade principle, where it behaves on the principle of that the market's memory is going to be triggered at some point in the future, okay? And you can see that it has been triggered inside of this range, but having that understanding already when the candlestick arises gives you that edge, because you have an expectation that in some instance it's going to go back to that point, and you're then going to be able to react based on the logic of the block trade principle or the fair value gap or whatever it is that you use. You know, whatever system you decide to run with, go back. And you know what back testing is? See, back testing is a bit dead. Why? You should only really back test if you want to learn a strategy in terms of where you're executing it on the platform. True back testing, in my opinion, is not waiting for price to come and tap the 50 EMA and move away from it and then try and pull some statistics on your strategy analyzer or whatever, okay? And then say, oh, it's got a win rate of around 85% after 12 trades. Yeah, man, I got myself a system. That's bullshit, okay? This, for me, true back testing is doing this. I've identified an edge in the market. When I say I've identified an edge, it means that I've seen something that replicates itself over and over again. So I know that in the future, they're going to try and do it again, right? And take the example today, W formations. Go back and mark off 1,000 Ws, 1,000 Ms, and then come back to me and tell me that you see the market differently. Then the next step after that is to try and marry the idea of where we are on a macro perspective. What's the sentiment? Why would W formations work on the euro? Well, everything's been going into the euro. China's been encouraging investors to go and buy European stock. NASDAQ goes down, euro goes up because the dollar appreciation's going down. So then you can marry up technical analysis and fundamental analysis. If the carry trade is working, that means the yen's going to go down and the euro's going to go down because they're just taking money out and going into the dollar. So any M formation that you see on the euro is more than likely going to work out. So if you've gone back and looked at many M formations, you'll then be able to marry up and say, okay, I've seen this before. M formations that happen on the euro when price is rising tend to fail. But when prices are coming down and euro shows M formations, marrying the idea of the macros, I can justify it and execute that. That's what backtesting realistically is. When you go back and try and find something that's happened before, and then you train your mind to register its behavior and its development so that when you do come into the future, you can then anticipate how likely it's going to be based on your experience from seeing it before. That's how backtesting should be. Don't make your backtesting mechanical in the sense where you just put in your system, cross over EMA, wait for it to do it. You need to see it for yourself. You've got to build an intuition on how you work a system, whether it's ICT, market cipher, MACDs, hybrid system, it doesn't matter. It's all about how you develop your intuition for it. All right? Cool. With that being said, ladies and gentlemen, I hope that helps you out. Okay, keep an eye out on what's going on with Nvidia. Everything you need regarding the hybrid system, all the fun and stuff is in the description of this live stream. But I do hope it helps you going into your trading. All right. Other than that, guys, mad love and respect, man. Try and keep this live short and sweet. 30 minutes on the nose-ish. I'll be catching up with you all later. Peace.